Hey everyone, it's Tom here. Today's video we're going to talk about the ATR. Now I know in previous videos, if you watch some of these, I've gone through and mentioned the ATR when we've talked about strategy rules, about general indicator processes as well. But what is the ATR? What are we talking about when we're mentioning this value? And why is it useful? Well, today I wanted to cover that. I wanted to go into how we calculate it, what it actually means, and is it useful for our trading, or is it just one of those indicators that people like to mention that really has no help or benefit to your trading? So we're going to cover all that, guys, and yeah, let's get started. Just very quickly before we dive in, if you're still struggling with your trading or you'd like to know more about how mechanical edges are traded, I've put together a free video course for you that'll map out and explain everything in detail, along with walking you through exactly how the mechanical rules actually work. If you'd like to watch that after this video, I'll pop a link in the description. You can click through and you can watch that straight away. So let's start by covering what is the ATR. So ATR stands for average true range. Now for some of you that might make sense, for some others you might be thinking, well, that doesn't tell me anything, Tom. So what we're talking about here is a measure of the relative volatility in a market. So how much the market has moved on average per candle. And with the ATR, we can look at things like seeing about markets that are overextended. We can look at using it for potential stop loss placements. We're going to cover that a little later on in the video. And also in terms of looking at potential profit targets, how far a market is potentially going to move in a certain period based on what it's done across the average recently. Now, we calculate the ATR from something called the true range. That's obviously where the average true range part comes from, the title. And usually you'll see if you load up an ATR indicator on your broker, it's across a period of 14, which is kind of the generally accepted average. Some traders move it around. In terms of this video, I'm just going to cover it based on the 14 period. That's the only period I've ever used consistently. So now we see kind of what the ATR means. How do we actually calculate this? Most brokers will do this for you, but I think it's always good to have an appreciation for how the indicator works. So to find the ATR value, first we need to find the true range across a period. Now, when we're talking about the true range, what we're talking about here is the highest of three potential values. It's the highest price of the market minus the lowest price, or the highest price minus the previous close, or the lowest minus the previous close. So out of those three calculations, whichever is the largest is our true range for the day. So on the side here on the screen, I've just got an average of 14 days. I was looking at this on an hourly chart on a currency pair and just measuring the true range on each candle there on the hourly chart for 14 periods. And that's what we've got there, and a true range across 14 periods. And that's what we would use to work out the ATR. So the true range total across those 14 periods is 373 if you add those up. And that means the ATR on that particular market based on a 14 period is 26.7. So that's the average amount the market has moved per candle. As I said, this example is on an hourly chart. It would be the same process if we did it on a 5-minute, on a daily, for example. We would take that true range for each candle and we would add them all together for a 14 period, and then we'd work out the average. And that's essentially what that indicator is doing if you load it up on your broker. So let's have a look at the examples of an ATR on an actual chart now. So we're here on Euro USD on the daily chart. I've got the candles loaded up and I've got the ATR loaded up below. And most brokers will represent the ATR as this kind of line chart below the main candlestick chart. And as you can see, it's moving around, and if I hover over, I can see a number that appears each day, which is the calculation that we just covered in the previous section. And as you can see, where we get the larger candlesticks, we get an increased ATR, and where we get the smaller candlesticks, we get a lower ATR as it fluctuates through. Obviously, with every indicator, it's going to be lagging because it's covering a 14-day period. So we're going to see spike or peaks and troughs as the market changes. And you can see here, if you go back to this period here in the end of December, where we get small candles there, not a lot of range, not a lot of true range in each candle. The ATR is dropping, and then we get a spike. We get larger candles here. We can see the change in the market. Those are the ones which push the ATR up. So you can see those periods of volatility appearing both in the size of the candles, but also a little easier to see visually in terms of the ATR. And as you can see, it's going to go in waves. The same on every market. If we load it up, for example, the NASDAQ here, you can see again, the ATR works exactly the same. Those more volatile periods are represented by the peaks within the ATR. So how can we use this to our benefit? Is there any benefit to basically having the ATR on our screen? So how can we use the ATR to our advantage in trading? Well, one method that's quite popular with traders is to understand when a market is overextended and when it's maybe not going to go any further in a particular period. So let's take the Euro USD example here, and we'll check the daily ATR to start with. So today, if we go to this ATR value, which is 69.6, so let's say the ATR of 70 at the moment. Now let's drop down to the hourly chart. Say if you were trading on the hourly, this would give you a good indication of how far the market may move in a given 24 hours for this example. And so what we would do is at the very start of the day, well, this is our highest point so far. So if we were going to trade, say, the European Open, so 8 a.m. my local time, we may be trading bearish here because it looks like it may be dropping down, a continuation of this downtrend. But how far could it possibly go? Well, if we take the period around here, so the high, we know that the daily ATR, as we said, was, say, 70 points. So we might expect it to go from the highest point in this day down 70 points to the lowest level it could go to if we're basing this on the ATR. So if we measure that down 70 points, we get to there. And you can see that the market has kind of dropped and it started to sort of plateau out, flatten, use this as a support zone around that 70 points, the distance that we saw based on the daily ATR. So in this way, it can be quite a powerful tool to understand how far we think a market can possibly move in a day based on what we're seeing on the higher time frame ATR value. And again, we can do this on the daily compared to the hour. You could do it on any two time frames compared to each other, as long as you make sure you're measuring the correct distance. Obviously not a foolproof indicator. Sometimes we're going to get overextended markets, absolutely. But in general, it's a good way of us seeing how far we think the market could drop or rise in one direction in a given period based on what we've seen on the higher time frame. So another use of the ATR is to help us set a stop loss. And this is kind of more of just a sort of a general rule that traders use. But if we're struggling to find a stop loss location, one rule that I know a lot of traders will use is to take a multiple of the ATR from our entry point as our stop loss distance. To show you here, I'm on the 5-minute chart now. Again, this would be the same on different time frames, but we would go to, say, this candle here. Let's say we're expecting a bounce back up here from this small bearish trend, and that would be my entry point at this pin bar candle here. And I wasn't sure maybe, to use the recent low here or take another stop loss. So what we could do is simply to use a multiple of the ATR. Now, you'll hear different things from different traders. Some will say we'll just use a 1 period ATR. Some will say we'll take ATR times 2. Some will say ATR times 3. So let's just do the 2 times example here. So we can see at the bottom our ATR at this point is 3.8. Obviously, it's a lot lower than what we saw on the hourly and the daily charts because the candles are a lot lower in terms of the distance they move on a 5-minute time frame. So 3.8 here times 2 gives us 7.6. So all we would do simply is to place our stop loss to ATR down, which is down here. And that would be it essentially. We would just use a multiple of the ATR to get our stop loss placed. Now you might think, well, that's a bit crude, that's a bit basic, but a lot of traders do use this approach in terms of identifying where to get their stop losses placed. So in certain situations, maybe we don't have such a clear recent high or low, we can use a system like a multiple of an ATR. As I said, mostly between 1 to 3 times the ATR value to get our stop loss placed. And it can be quite a powerful tool that traders use, particularly if you're trading mechanically as well. So there we have a couple of uses for how the ATR works, along with what it actually means as well. Now, with most of these indicators, brokers will automatically do the work for you. They'll just place them on your screen. But I always think it's vital to understand what an indicator represents and how it's calculated to better understand how you could potentially use it. So whether it's within targeting your profits, whether it's within looking at overextended markets, or setting mechanical stop losses, the ATR can be really useful in understanding maybe some of those gaps in our trading knowledge. With that being said, guys, hopefully that's been useful. We're going to do a few more of these in terms of covering the use of different indicators. But until next time, thank you all for watching. If you've always got a question, let one of our team know, book a call, have a chat about how we use our mechanical trading approach as well. The links are in the description below. And other than that, hopefully see you on the next video. Take care, guys.